Hey folks, Dan Frio here with your closing bell for October 17th, 2024. So mortgage rates went up a little bit. It's all due to retail sales and this strong consumer demand. So we're going to take a little bit of a dive into that context in the economic news for today because there's not really much out tomorrow. But one other thing we're going to do, we just rebooted our website, so we are back up and running. But we're also going to talk to you guys about down payment assistance, how you can get some free money just kind of like these people are. Student loans are getting $4.5 billion in relief. The Biden administration just today also announced $425 million more going to Ukraine. We go over here and the border crisis is costing us $157 billion, just adding more to this stuff. So if you don't really care about this stuff, well, let's just give the money away. So I'm going to show you some down payment assistance programs that we have for you. And the good news about this is it's not coming mostly from the taxpayer. Mostly what it comes from is, like, for example, we have a grant or a program here for down payment assistance in Illinois, and that money is funded by the Federal Reserve of Chicago. So what happens is the Federal Reserve of Chicago, they're mandated to use a certain percentage of their profits to help people buying homes. So what they did is they gave us $1 million because we are a federal bank to assist home buyers when they're buying their home. So check out the latter part of this video. We're going to go over Chicagoland or the Illinois down payment assistance programs that we have, and these are just specifically for our bank. They're nowhere else can these be found. It is specifically here at Serve Bank. And then we're going to also take a dive into the three of the hand-picked down payment assistance programs we chose for you. So I'm going to show you the website to go to and how to maneuver through that system at the latter part of this video. So without further ado, what happened today? What in the world's going on? Well, the stock market, they sure loved it. We have completely green across the top except for the Russell 2000, and we saw the VIX coming down. The nice thing about this is the VIX, that's basically the anxiety level in the stock market. So as that comes down, people are more relaxed on things. So we like when that's coming down. Go to the cryptocurrency section of this, and it's down just a tad. Let's check oil. Oil is up just a tick, but sticking right there at that $70 to $71 barrel target that we're looking for. So all those numbers so far are pretty good. So now let's get over to the MBS markets. Right now, the MBSs are getting crushed. MBSs are down 32. So we're going to see a continuation of deterioration of mortgage rates. So they're going to continue to go up. But there was a unique interview right through here. Is Rick Santelli, and I just forgot her name. She's the real estate analyst on CNBC. They combined data today, and I'm going to let you listen to this. It's pretty intriguing. He starts talking about the stock market and the economy, and then Diane is her name. Diane comes in, gives us a little bit about real estate. Then when you come back, we're going to figure out, where did that crash go? Is it around the corner? Is it past us? What's everybody talking about when they talk about the housing crash? So let's get to the interview. Then we come back, we're going to dissect what home values are doing in specific areas. So let's get to it.
Very busy day for EcoData. Let's get some more with Rick Santelli crossing the tape. Hey, Rick.
Yes, Carl, indeed. We're looking at business inventories for August, the Q3 number. If it builds, of course, we may add a bit to GDP, although I will point out that we get our first look at third quarter GDP on Wednesday, October 30th, right before Halloween, up 0.3%. As expected, in rearview mirror, up 0.4 becomes up 0.3. And all you Fibonacci guys out there, that means 5 out of 8 readings in business inventories this year have been up 0.3. And retail sales, yes, Sarah, rates are up today. Retail sales was strong, but there's a battle going on, the seasonality battle, whether it was the jobs report or retail sales. If you look at all three, they were negative. Retail sales, non-seasonally adjusted, was down 7.5%. Many economists are trying to debate how to interpret that number and to interpret National Association of Home Builders Market Index. For that, we go to Diana Olick. Diana?
Well, Rick, builder sentiment in the market for single-family homes rose 2 points in October to 43 on the National Association of Home Builders Index. Anything below 50 is considered negative, but this is the second straight month of gains. though, despite the builders citing affordability conditions. That's because mortgage rates have moved higher in the last 2 months. But the builders say they are feeling more optimistic about the market next year, expecting rates to lower, though they are forecasting uneven declines, they said. Now, of the index's 3 components, current sales conditions rose 2 points to 47. Sales expectations in the next 6 months increased 4 points to 57. That's the only one in the positive territory. And buyer traffic rose 2 points, though still only at 29. Regionally, sentiment was strongest in the Northeast at 51. Every other region came in at 41. And finally, the share of builders cutting prices held steady at 32% in October, while the average price reduction moved back to the long-term trend of 6% after falling to 5% in September. Sarah?
Interesting to know. So home builders, they're cutting their costs. It was 6%. They reverted that down to 5%. Now they're giving 6% off of cost. So that's good news for consumers. Maybe it's shrinking their profit margins on the building side, but it sure is helping consumers out right now. So that housing market thing that people keep talking about, let's just look at some basic information, okay? I'm not making this stuff up. And honestly, folks, I just give you the data as it is. You might say, well, I'm in real estate. I'm a mortgage advisor. But I don't, it doesn't really behoove me to sell you guys on home prices are going up or down or sideways or whatever, because we make money on transactions. So we're here to educate you on all this stuff, okay? So the disconcern that I have is you've been educated over the last 3 or 4 years that home prices are going to crash. But I keep trying to be contrarian to that. So let's just dive into some of the data. We'll go to Zillow. You got to understand some data has to be used when we're looking at these things. So let's go to Zillow. And if you just go to Zillow research section, here's what you're going to find. Here's what home prices are doing, home valuations. Here's what they've done. And a lot of people said, okay, well, they peaked out in June of 2022, and then they came down from there, and that was the peak of the market. Well, unfortunately, the peak of the market just continued to go up. Okay, so that's what we're seeing through there. All right, month over month, it's basically yin-yang. It's 1 month it's up a little bit, then it comes back down, then there's prices go back up, rates come down, then rates go up, and people cut their prices, and it's all over the map. So I get it, but the trajectory here, look at it, is where we've been. Okay, so now let's go to this. Here's where home prices are. This is Zillow's, where we are so far in 2024. Okay, San Jose, California is up 7%. I never expected in my wildest dreams there would be a market up almost double digits in 2024. But there are some markets that are deteriorating. Look down at New Orleans, it's down 4. Austin, Texas is down 4. But if you look at the norm, it's right here. I mean, this is basically kind of where you see a normal market, right through these areas, right through here. Okay, so that's one part of the equation I want to talk to you about. If you go to Zillow, and I'll show you where I'm at so you guys can actually do this on your own. You're going to go to Zillow and you want to look at the housing data. You want to go to research, then housing data. Okay, what you're going to do is scroll down. And let me just show you some of the tools that it has for you to work with. So here's the home prices, how much it's done over the last, the last year. Then we go to rents. Okay, what are rents doing? Well, you have Hartford, Connecticut. Rents are up 7.5%. You go down to Cincinnati, Ohio, up 6%. Detroit, Michigan, up 5%. So just think if your rent went up every year 4, 5, 6%, at what stage would you be completely out of just even renting a home? Okay, so we'll just leave it at there. Let's look at inventory. This is the area where people are saying there's way too much inventory, so the market has to crash. Well, it doesn't have to crash. Hold on, I think there was a chart that I was pulling up that might be a little bit helpful to you. Let's see if we can go through these charts right through here. So we'll go back to that first charting program I gave you. So here's rents. Okay, the nice thing about this is I like graphics. So here's where rents are. Okay, 2016 to 2024. You were down at 1,200, now you're at 2,000. Okay, so the rents have gone up and up and up. Here's where they were, and it skyrocketed during COVID. And then it came right back down. Right now, the government is using a figure in the equation that they use of housing at about 5% right now. So when these numbers get reacclimated to about 3.3% or maybe even less than that, a lot of the inflationary numbers that the federal government's using is going to be coming down quite a bit. And you'll see that probably over the next 3 to 4 months in that sector there. But the nice thing is I'm just going to show you all the tools that they have available to you right through here. Days on market. If you can see that, Austin, Texas, it's 2 months. This is usually, 30 days. something like that. So here's where the norms are. You can see right through there, 25 to 30 days. So you have that. These other areas, you put them on the market and they're selling. So when people come out and they say, Dan, people aren't buying. Well, yeah, they're buying. Days on the market, 8 days in Columbus, Ohio. So that means you put your house up for sale and it's gone within a week. Okay, so that tells me there's exuberance still in those areas. When you get to these areas, it's a little overdone. And we called that Austin, Texas, some of the areas in Texas, California, and Florida. They're gonna take a kickback or a hit back because they had massive appreciation. Okay, let's go to inventory. Everybody says inventory is at the highest levels basically ever. Well, that's not exactly the truth, because back in 2020 we had higher inventory, but yes, it's higher than normal. So that's good. That's good for prices, because the more of something you have out there, the more competitive people have to be. Thus, prices probably going to come down. New listings, how are they hitting the market? Well, if you look through here, you can see here, it's normal. Okay, right through here, levels, new listings, raw data from September of 2024. Look at the years previously, right about this time in October. Where were you? Well, 2023 was equal to, 2022 was higher, and 2021 was much higher. So inventory is kind of in line, but it also depends on where you live. If you're in the East Coast or West Coast of Florida, it's probably terrible right now, okay, because of the hurricanes and everything else, and especially many areas. But, but let's see. Price cuts. Normally price cuts are around 30%, okay, on a national level. Okay, so here's what you have. So the areas that are being more affected than most, you have right out through here, Salt Lake City, Utah, Boise, Idaho. Those areas saw massive appreciation during COVID. And then you have areas like this, Knoxville, Tennessee. Knoxville, Tennessee, there's a lot of people moving from over here into this corridor right here. We're getting a lot of business from the Northeast section right through here right now. So that's just, I'm showing you the tools for you guys to use. And I'll put this link down below. Sold above listing. Okay, you can see that right through here. So where are we at in 2024? Not many are selling above listing. Look at 2021. How much more people were overspending at that time. Some of these people weren't even looking at the houses. So when you have regrets, you see those videos of people, I should have never bought this house. Well, it's probably one of these that paid $100,000 over asking and never even looked at the house. Thus, you're going to run into problems. You're making the biggest purchase of your whole life. You need to know what you're getting into. Okay, and pending sales right through here, and it's kind of look again. We're right in line to where we were last year. We're lower than the last 2 previous years, but that's expected. The Federal Reserve, that's their goal. They were trying to cool this all down. So that's the housing market kind of in general. Okay, so now let's get over to some of the grant programs. So if you're looking to buy that house, maybe you finally decided, okay, house prices aren't going to crash. So maybe let's look into buying, but a little short on funds right now, because remember, the real estate market has changed quite a bit in the past year. It used to be where you basically use a realtor if you're buying a house, and you really didn't directly pay for that realtor. Well, now you have to. So you're going to incur a little more costs when it comes to buying that first house. So let me introduce to you two of the new grant finders we just created. And we updated our website. You probably won't see much on the face value of it, but there's a lot of tools in here that you might try to at least understand. So go to therateupdate.com. Here's our website. Okay, here's what I want you to do. Go to Grant Finder. Now, if you live in Illinois, you're going to hit the Chicagoland grant. Okay, if you live anywhere else in the country, you're going to hit the national grant. And I'll just walk you through a little portion of this. Let's just do the Chicago grant. I'll show you how easy, how kind of quick and efficient this is. We're going to go down through here, and I don't have an address on the top of my mind, but I'll just show you how this works down to that equation right through here. It's basically saying, are you locating your buying in? Okay, so location you're buying in, sorry. Here's all the data here. Basically what it's asking you just to say, plug in your address. So you're going to go to this geocensus code, okay? You're going to plug in the address right through here. It's going to give you some kind of coding. All right, you're going to go back into here and you're going to fill it in. Then it's going to tell you, it's going to ask you a few more questions, and it's going to say, well, you're eligible for the grant. That's how easy it is. It's going to take you probably total 3 to 5 minutes tops. So that's how it is. If you like what you see, you'll be able to click on and start your application process immediately. Well, let's just go to our website, main website. Here's our main website. So if you want to reach out to us to maybe see if you can buy that first house with a grant, right through here. Maybe you didn't qualify for a grant, but you still want to discuss this, or at least go down that avenue. Maybe you're looking to buy that first investment property. Maybe a refinance right now. We have probably half our portfolio right now is refinances. People that were in the high 7s now getting in the low 6s. Believe it or not, they're saving saving a lot of money. If rates continue to go down and maybe hit like mid fives, low fives, they might do it again, because most people, they're equating one mortgage payment to the cost of the refinance. So just think, and you skip a mortgage payment. So you can refinance, use your mortgage payment to refinance, skip that month. Then when your mortgage resumes, you'll have that lower payment, or maybe you have a shorter term. So that's our goal for you here, is mainly just educating you of the facts and nothing but the facts. So my name is Dan Frio. Hopefully you learned something today, especially about down payment assistance and maybe how much the federal government is actually blowing our money, and how you should basically reach out to one of these programs and take as much money as you can at this time. So again, I explained to you how those work with the grants from the government or the Federal Reserve banks and so forth. So hopefully I understand that. And if you've got any other questions, reach out to us. We'd love to help. How do you do that? Well, you can click right through here to get the application started, the Apply Now button, or you can scroll down to the bottom of the website and you're going to find all their information right through here. You can call us at 844-775-5626, or you can email me directly at dan@therateupdate.com. So thanks so much for watching, guys. Have a fantastic evening. God bless. Be safe. And I'll see you back here tomorrow. Take care.